Right, let's give you a sense of the very latest in the world of business, starting off with the JSE, which is marginally firmer so far today, with global markets mixed, with a focus on the Federal Reserve policy meeting outcome on Wednesday. Kagiso Matlala, Standard Bank equity sales trader, joins us now for a market review of the latest market moves. Very good afternoon to you, Kagiso. Thank you so much for your time. How are emerging market currencies, including the Rand, faring so far today?
Afternoon. The Rand's been slightly on the back foot this morning, but in line with the rest of its EM peers. The weakness is expected ahead of a very busy week in the US. As you mentioned, the FOMC later this week will be quite impactful on our currency. That being said, the Naira has also been quite topical. We saw yesterday the Naira dropped about 45%. Basically a change in calculation of how FMQD was calculating their rates. And obviously, as you saw, it drop about 45%. This has an impact on a few of our local companies like MultiChoice, MTN. But it has been going in this trend for over since last year, June. So all in line so far.
South Africa's private sector credit grew by 4.94% year-on-year in December of 2023, surpassing market forecasts of 4.1%. Talk us through this figure.
Yeah, the credit did overshoot in December, was underpinned by stronger than expected growth in the corporate sectors and the general loans. But what was encouraging was the household credit growth weakened further, both year-on-year and seasonally adjusted. This is consistent with the weakness that we saw in the retail client data that we saw in December. Credit trends haven't really been a key determinant of the SARB interest rate decision so far in the latest cycle. But at the margin, the persistent weakness in this kind of data is a dovish read-through for the monetary policy.
London's shrinking stock market also reaching a new milestone, with the latest data showing that the bourse has lost 25% of its companies in the past decade. What's going on in that space?
Yeah, that's correct. It is a decade low, but with a 6% drop last year. This isn't a new trend. It's worth noting that the listings did peak as far back as 2010, so they have been decreasing since then. Obviously, there's a lot that's happened in the past decade in London, in the UK. Brexit has been a key component where we've seen a lot of companies had to move headquarters to the likes of Amsterdam, to the likes of Paris, etc. So in due time, this was coming, and it's kind of expected. We've seen on the converse, the likes of the Paris Exchange and the Amsterdam Exchange almost surpassed the London Stock Exchange, just given this kind of move.
An American Restaurants International PLC and the Middle East operator of KFC and Pizza Hut have cut almost 100 jobs in an internal restructuring. What has led to these layoffs?
Yeah, so you're correct. It's 100 jobs and mainly in the Dubai office. It's worth noting that obviously American Restaurants employs tens of thousands of people in the Middle East. So 101 office is not the biggest thing that could have happened. But you're quite correct. It'd be ignorant to ignore the current geopolitical situation that's happening in the Middle East. And this could surely have some kind of impact on why this decision was made. But the company has come out and said this is part of their strategic and growth outlook. So that's what it seems like for now.
Thank you very much. Let's perhaps leave it there for now. Standard Bank equity sales trader Kagiso Matlala giving us a sense of how the markets are faring this afternoon.